Good day. I'm Chris Jordaan. I'm the CEO and President of Superior Gold. I'd like to introduce Paul Olmsted, our CFO, who's joining me here today, and would like to share with you a bit about the story and the narrative that depicts not only what we're currently doing here at Superior, but also what the future looks like. In essence, it's a single asset operation up in WA. We're operating a mine that's been there for in excess of 30 years with significant upside potential. Yes, the operations has gone through some difficult times. I think the benefit we have is a lot of work both in the technical space as well as on the business development space around opportunities that has been done by my predecessor, the interim CEO, Tamara Brown. And we have taken that strategy in the process of unpacking that and really understanding what the underlying components would be to build towards moving this business not only from a stable operation, which we believe we now, but also to take it up to a business of scale and also to look at opportunities to grow through the drill bit.
Brilliant. Chris, lovely to meet you, and you too, Paul. First time I've spoken to you guys, so appreciate it. I caught up with Tamara back in June, where she talked about you coming on board. So it's good to see you and maybe speak to you now because you've had your feet under the table for a little bit longer. So you're right. When I first heard this story, a bit of a train wreck, been high grading, production falling, market fell out of love with it. Tamara came in and instigated a few kind of processes. She's talked to us about kind of 4 areas of the business that she has looked at. I guess you've been brought in to try and implement some of that and see what else you can do. So can we just get a little bit of background on you first though, Chris, if you don't mind?
Yeah, sure. So I joined from Newcrest Mining, which is the largest gold producer here in Australia. During my tenure there, I had both corporate as well as operational roles, initially starting off as Chief Performance Officer in 2016, and then moving up to the Lihir Gold Mine up in Papua New Guinea, which I ran just under 3 years. Then jumped onto a business improvement overall project for the Papua New Guinean assets of Newcrest, and since then, I think from the 1st of July, joined Superior Gold.
Well, why would you leave Newcrest? You must have had options if you're thinking of leaving. Why would you join such a small company with a disastrous track record as this one seemed to have? What attracted you?
Well, it's interesting. Most of my career has been taking on turnaround opportunities. I think my experience both in the business improvement space as well as managing large businesses has put me in a good position to take Superior Gold forward. I think what really attracted me was the growth opportunity that Superior delivers. We're very comfortable that we will be able to stabilize the business for the long term. And now it's about, how do we grow it? How do we make it a business of scale?
Okay, well, we talk about stabilization. That's fine. So when we spoke with Tamara, she talked about introducing modeling, which is not being done before, processes around where you allocate capital and drill bits, which has not been done for a long time before. You've just put out a quarterly there. It says, you're up, just over 19,000 ounces for the quarter. It's still quite small. You've got a long way to go. So what are you doing?
So the first thing that's important after the work that Tamara completed was to really understand what the underlying opportunities are. So her work was primarily defined around what are all the opportunities. Now the job is, what is the sequence of these opportunities? Which of those opportunities we need to shelve for now, preserve for the future? Which are the ones we need to understand better? And which are the ones that we need to deliver on? So one example, the one we need to deliver on is we need to increase our throughput out of the underground mine. We've done exceptionally well up to now, but there's still a lot more that we need to deliver from that perspective because it forms the mainstay of our supply to our mill. The second piece around how these opportunities stack up, we started off with the Plutonic East mine, the open pit mine, in May this year. We're now moving into Perch, which is the second open pit, and there's a sequence of other open pits that needs to follow on as we set ourselves up for the main pit pushback project, which still needs a lot of work to be done in that space. But that in the meantime, we're looking at a number of options how we can build this inventory of ore, because fundamentally the business is ore short, and that's the main challenge that we need to solve.
It must be really frustrating for you. You come from Newcrest, big budgets, big balance sheets. You had all the money you wanted to be able to do the things you need to do. Small company, cash constrained. What are the first problems that you've identified that are going to cause you problems in terms of producing at the speed that you think is possible? You talk about growth stories, but with no money, it's hard.
Well, it's interesting. We have a few very low capital opportunities, on our doorstep. So we're looking at, the open pits. We've delivered Plutonic East without any major capital requirement, in addition to what we had and generated from financed from the cash we generated. In addition to that, we're going to do the same with Perch as we go forward with that. I think what's important is to recognize, and we've just recently announced that if you look at our cash position, despite all these investments we're doing, our cash balance is still improving. And maybe, Paul can talk a little bit about that specifically, but, we're very happy with our cash generation capability. We hope to see, as we increase our production, to see our costs going down and to create a much larger headroom relative to the gold price. But maybe Paul can add to that as well.
Okay, well, let me ask Paul. Paul, you've obviously having to deal with the same constraints that Chris has, in the sense it's a small company, and small companies have different problems from big companies. And you're an accountant or as a CFO, you've got to, keep the balance sheet in check. You've got to make sure that people aren't spending money on things that they shouldn't. This isn't the time for throwing caution to the winds. You've got to be steady as you go. So what are the constraints that you're working under, and therefore what the company is working under?
Well, certainly over the last year, we did have the constraints with the term debt or gold loan outstanding that we had with Ormet. That term debt was finally repaid at the end of June. And based on the current gold price, that was costing around $2.5 million US per quarter of cash flow. So with that now gone at the end of June, it certainly opened up some flexibility for us to utilize that cash to put back into the operation on exploration, trying to advance exploration in both the underground and the open pit. So certainly, the balance sheet has improved significantly over the past year. So I think our flexibility is opening to do other things.
Okay, so what is the cash position?
At the end of September, we were at 20.5 million US cash on the balance sheet.
And that's probably already been allocated to specific silos. So what are they? And which bits of those are growth and which bits are sustaining, and which bits are, quite frankly, dealing with historical issues?
So I think in the short term, we're certainly looking forward to increasing our production profile. And I think the benefit that we're really going after, and the main lever, is around volume. More out of the underground, more higher grade ore out of the open pit, being able to run the mills harder, producing more gold, because we believe that our fixed cost base currently would be strong enough to carry it up to about 100,000 ounces, which means the additional ounces from where we are typically analysed now at 77,000 ounces would to a large extent come in only at variable cost. So we would expect a reduction in costs, and therefore creating more headroom and, improve our cash flow position. When I joined, one of the initiatives we started was what we call an opportunity review, which basically looks at the full potential of the business. That work is coming very close to being finished off in the next few weeks. That will give us a very clear indication as to what the priorities are of our growth strategy, which are the ones we need to do first, and what the financing would be that we're looking after. We're clearly aware of our cash position and the challenges in that space. Although it's improved significantly, we'd like to see that improve further, as I quite rightly said. The important thing here is we're looking at options which have low capital requirements, but will be able to progress our production profile. And one of those opportunities to see whether there's potential early entry opportunities into the main pit. Okay,
so underground is cash flow at the moment. The open pit is the potential in terms of you putting more ore through. The kind of third arm that we talked about in the past was tolling, because you've inherited or you've acquired a very large infrastructure. There's a sustaining capital required for that if you were to maximize it too. Are you going to have enough money to is that going to be a restriction for you?
No, I think that the main restriction here is just getting access to the ore. As you know, we're sitting on latent capacity 1.2 million tons per annum in an oxide circuit. That plant needs a bit of capital to get it up and going again. The key for us would be to get the appropriate ore to feed into that process plant. And that will be, fundamentally part of what we need to deliver in our strategy going forward. We would expect if that mill capacity starts up, and it's certainly our intent to do so, to add another 50 to 60,000 ounces per year to our profile, which is, a significant uptick from, what we're currently trying to achieve, taking the current mill up to 100,000 ounces.
But that's not entirely coming from the open pit component that you're looking at. That we're talking about tolling as well, are we?
Yes. So the second mill, and that's why I took the cue on tolling. We typically would look at external supply of feed to run that process. The opportunity we have, or the strategic opportunity we have, is that we're the only milling capacity in about 150 kilometers radius that can get really going quickly. So that's where the real opportunity lies.
And what does the margin look like on something like, in terms of a tolling agreement? You talk about, that volume. What does that contribute towards the bottom line for you?
Well, it's going to be a function of how much money we need to spend to get it up and going first. What we are seeing is that the fixed cost component of it will certainly be lower than what we're currently seeing on a per ton basis. What we are looking at is options where we could reconfigure our process plant potentially to get those ounces, but get them at a much lower cost from a milling cost perspective. Because at the end of the day, that just once again contributes to a lower cost. So I would expect, those incremental ounces to come in at a much lower cost than what we're currently producing. But then once again, it's a function of how much we're going to pay for external ore. And tolling is one option. There's options of putting JVs together. There's options of acquiring potential assets into the future. So it's not only around tolling as a potential solution to this.
Okay, let's stick with the tolling, because we talked about it in the past, or I've talked to the company about it in the past. Just to help people understand the economics around this one, because it could be meaningful, and also the access to capital could be a lot easier if it's very specific to that function and utility, which is if you presumably go and either buy or acquire ore, or say JV to get ore, and whatever that agreement looks like, you can go and have a meaningful conversation with financiers and say, right, just for this bit, can we borrow X to get this mill up and running, optimize it to be able to feed this ore through because the numbers look like X. How long does that process take to work out?
So the opportunities we're looking, just quickly talk about timing. The opportunities we're looking at currently will probably not be available or feed into the process plant, before 2023, which in fact suits us well, because we need to spend some money to get the process plant up and going, and that's going to take about 9 to 12 months to get that going. Current estimates is about 20 to 25 million Australian dollars to get it up and going. Of course, we're going to try and optimize it as far as possible. But that's what it's going to take, just purely looking at our own infrastructure to get that up and going. Once the ore is available and the process plant's ready to go, it's a very quick startup. That process plant is very similar to the one we're running now. So in essence, we'll use the overhead structure that's currently in place there, with a few extra operators and maintainers, and we should be all good to go on that process plant. So it's relatively low capital, it's quick entry, it's much cheaper than building new process plant, and it's demonstrated technology. That process plant has done really well in the past. There would certainly be options depending on the ore supply that we get to augment the circuit with, for instance, a gravity circuit. That will be a function of where we get the ore from, and there's a number of options that we are looking at.
Okay, fantastic. So I just want to kind of step by step so I can understand the basis, the bedrock on which you're building this company for future growth, or to enable it to hopefully be successful, which is on the underground. I need to believe that you can sustain the current production from there. I know you put out a few high grade results recently as well. Do you foresee any issues there? You've come in now, you can look at it with a fresh set of eyes, and you can be honest with the market and say, I haven't quite inherited what I thought I inherited, so now's the time to say it. So are there going to be any problems with continuing to sustain production from the underground at the current rates?
So look, there's no doubt the underground is a challenging ore body, just purely because of the spatial positioning of the ore. And that's one of the key things that Tamara recognized that we need to address. And in May this year, we started off a technology project to better forecast and predict exactly where that ore is. And our geologist has run with that project. It's a project that will be finished in 2 phases. The first phase was complete at the end of August. The second phase will be complete by the end of November. So that's fundamentally key input to not only our budget for next year, but also putting us in a position to reconsider our block models, our resource and reserve statement, which we will be presenting at the end of Q1 next year, early Q2 next year, as well as the life of mine. I think a key element there would be our consideration of our inferred, measured and indicated resource versus our reserves that we have in the business. There seems to be a bit of a disconnect, and some I think uncomfortableness that the reserve number is quite low. We would expect that number to adjust as we better put ourselves in a better position to predict spatially where the ore is and how much ore is out there in the underground. So that's just understanding the current ore body. In addition to that, we also added an additional drill rig a few months ago, which is absolutely dedicated for underground exploration. And as you said, we've had a few fantastic hits. There's a new report coming out in middle of November that's specifically going to talk to drill results out of the Western Front, which we believe is going to be fundamentally part of the future of the underground mine. So although we're currently mining mostly in remnant mining, there is a transition where we're going into new areas. And we have to do that to increase our throughput from the underground over time.
Fantastic. Okay, you kind of hit upon a couple of topics there, which are interesting. So underground exploration on the current ore body, or are you looking for new stuff?
Well, it's in the current underground ore body.
Right, okay.
What we're doing is we're drilling from our current infrastructure to see what is near to our current infrastructure, so we can get there quicker. And that's where we've been able to get the good results.
Okay, and obviously at surface too. But what about new pure exploration drilling in the area? Is that going to be geared towards the sort of more open pit option that you're looking at here? Is that what it's going to feed into in terms of where the money's being spent, where you think the best chance of economic growth is going to come from?
I think the opportunity we have is that there are large parts of the property that's within our tenements which hasn't been drilled properly, and there's definitely opportunity there. In fact, we're sinking the first surface holes this quarter, and we have to give feedback to the market early next year, let's say mid-November, typically when we bring our exploration results out. That's one target area. There's a few other areas we're also looking at, but I think what's important for us is to appropriately position our spend in exploration. It's our third goal that we're after. We need to grow through the drill bit as well, and our property does allow and has proven quite successful in growing ore supply through the drill bit. And certainly we spoke about the underground, but the surface is definitely going to get more attention. The challenge we have with the surface drilling, of course, and there's two main areas that I'm thinking about now. We have to go through the heritage surveys to be able to get access to that land, and we're working very closely with our local communities, the Jordaan group and the Jidi group.
Can you explain a little bit more about that? Because it was literally the next question, which was, can you explain for people perhaps new to that or new to that process that's been gone through at the moment with the Hermes South Heritage Survey? What's it involved? What's it trying to do, and how do you interact with that survey?
So at the end of the day, we need to recognise and appreciate the fact that we're working and looking at options to grow our business on ancient land, and there's a number of Aboriginal communities that look after the land. They culturally, very closely linked with the land, and therefore it's important for us to work with them. In essence, what we need to make sure is that wherever we go, whether we do just initial drilling or initial workings, building roads, etc., to make absolutely sure that we do this, being joined by the HIP with these representative groups. They're very well organized at this stage. There's very specific individuals that we speak to, and they form fundamentally part and parcel of the process. And initially, once we've identified an area that we want to go in, the very next step is engaging with these local communities and then going through a formal process of a heritage survey. We have representatives there, they bring representatives to the table, and we have regular meetings in defining what we're going to do, how we're going to approach it to have the absolute minimum impact on their cultural heritage land.
And it's obviously, I think tempers have been slightly heated after, Rio maybe misunderstood the process that they need us to go through. Are you finding that slowing things down for you?
I think what is happening is that there's certainly a heightened awareness in the mining industry after that incident. I think what it is doing, it is putting strain on these organized groups that represent the land, and it's certainly a drain on their resources to be able to do these heritage surveys. So from time to time, of course, we'd like to get the heritage survey done tomorrow, but from time to time we would wait 2, 3, maybe 4 months, to get a slot in the schedule to do these heritage surveys. But I have to say we've come up with 1 or 2 really interesting and elegant ways to use the infrastructure of the representative groups to accelerate that rather than waiting too long. At this stage, it is a process where you need to keep your hand on it and make sure that it happens on time. But I must say the support that we've received from both the Jordaan group and the GDG group has been phenomenal.
Okay, back to a finance question. Okay, which is around, you talk about cash and cash equivalents of $20 million. So what does the cash equivalents relate to?
Paul, do you want to field that question, mate?
Well, that's pure cash on the balance sheet. So at the end of September, all of our cash, on the balance sheet was $20.5 million US. So with no term debt outstanding. Whereas previously our net cash position a year ago would have deducted all of the loans outstanding with the Ormet.
Got it. Okay, perfect. So which leads me to the next question, which is back to you, Chris, which is there's a clear disconnect in the market. You're 80 million Canadian dollars, right? You're producing 19,000 ounces. You believe that's a kind of steady state, which gives you the basis from which to grow. And, with the open pit, hopefully, well, you may be going to share with us what you think the potential is here, but the market's not buying it at the moment. Is $20 million and the next quarter's cash income going to be enough to allow you to spend your way through this uncertainty, or are you going to need to do something big to get noticed?
I think we're probably still in the wake of a number of quarters not delivering to expectation that was set by the company. That's the first thing. The second thing is, I think the market, and with all the engagements we've had over the last 3 months, I think the market is certainly looking at the opportunity, 2 or 3 times. However, we need to be able to demonstrate, repeated performance at the levels that we are now, and to show that once we declare what the next step would be and how we're going to get there, that we in fact deliver against that. So for us, there's really 2 things to drive this re-rate and increase the interest in the business. Firstly is making sure that we build our cash balance even stronger going forward. So, reducing cost is a key element for us. But on the other hand, it's also making sure that we're very open and transparent as to what the strategy is going to be, how we're going to grow the business, when the market can expect us, so the market can, measure our performance against that. And I think through that transparency and delivery against our strategy, we would be able to build a consistency which goes beyond just delivering a certain number at a certain quarter. It goes to us taking the market along on this journey to grow the business.
What about your Newcrest contacts? They're going to do you a favor anytime soon.
Do you mean about Newcrest people joining our organization?
Newcrest people joining the organization, maybe looking at some non-core assets, maybe using some of that credibility you built up over the last few decades working for a big company. Because the market wants to see big moves, and big company mentalities coming to small companies here. you know, you got to leverage what you've got, right? So again, it comes back to the first question I asked you, which is, you know, why on earth would a big company, experienced operator like yourself, come to a small company like this? You know, the organic thing is going to take a long time, and the market may not give you that time. So what are you going to leverage?
So I think what we're doing at this stage, which is important for us, is that we're following a measured approach, number one. Number two, we know what it means to have a solid foot on the ground, which is, you know, stable, reliable performance against what we put out in the market. I think the opportunities that are presenting themselves at this stage fits us very well, insofar as our growth strategy is concerned. Exactly how that's going to play out, you know, we'll probably be we'll know, you know, over the next few months how we're going to build these specific elements to it. I think the business still needs to create that level of understanding and also transparency, and build a trust in the market. You know, we have to strengthen the business before we start thinking about doing something, you know, very elaborate. Will the opportunities be there? And I'm absolutely confident that the opportunities will be there. Whether Newcrest will form part of that, I don't know. You know, I don't know what the guys are doing there. But I think the key for me from a Newcrest perspective is they certainly, you know, have done exceptionally well, and, you know, under the leadership of Sandeep Biswas have shown that they grow. And so I think at the end of the day is understanding what is the size of bites that we can take into the market, rather than, you know, being overtly optimistic. The market, you know, does not respond well if you go through a significant deal and it doesn't turn out the way it's supposed to be.